Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 877A, and today's date is January 26, 2016, and the title of the episode is The Economic Collapse is Now Spreading to All Sectors of the Economy. Let's get right into the economic collapse financial news. Now, the U.S. government, central bankers, they need to keep this illusion alive that we're in a recovery, and they're using everything they possibly have to keep the people convinced that everything is fine. This is why Obama, during his State of the Union address, came out and tried to convince everyone that everything is fine by telling you that the economy is doing well, and all those people who think that it is not, we're peddling fiction, we're fools, it's a conspiracy theory, you're just being ridiculous. And we need to remember, most of their statistics and the information they feed the people of the United States, they are completely manipulated, massaged to keep the illusion alive. For instance, the Conference Board Consumer Confidence, they are sponsored by the government, they get funded by the government, and they put out information to let everyone know how people feel in the country. And right now they're out there saying, wow, we have beat expectations of 96.5. We have reached 98.1. The people feel very confident that the economy is doing well. And this is what they report on the corporate media, and everyone goes, oh my God, the people are saying that everything is fine in the economy and we are doing very well. Well, we have Gallup, which is a people poll where they go around to actual people and they ask them, what do you think of the economy? Are we doing well? Aren't we doing well? What's going on? And I've said this before in other reports that these two contradict each other. Where the government conference board is showing us that everything is fine, the Gallup poll, which is done by people, is saying, no, people are not believing that the economy is doing well, and it is declining. So we have the conference board going up, and we have the Gallup poll going down. Which one do you believe? Well, I'm going to believe the people, because I cannot believe with the layoffs that we are seeing at this point that people actually believe that the economy is doing well. The president wouldn't have said what he said during the State of the Union if the economy is doing well. Because when an economy is doing well, we see things expand. We see retail expand. More stores are being opened. More people are getting jobs. More people feel confident. When you feel confident, guess what? You spend. And you see real estate moving in an upward direction. You see more and more people getting hired in the mortgage departments because more and more people are taking out mortgages. You see GDP rising. You see unemployment falling. Yes, they've been manipulating a lot of these statistics like GDP, inflation, unemployment to make us believe this, but all the other indicators, which is very difficult to manipulate, like retail stores closing, people losing their jobs, well, they tried to manipulate that by getting rid of that department that counts layoffs back in 2013. They got rid of it because of budget cuts. But we know why they got rid of it, because it shows that there's massive layoffs. But we do have private companies like Challenger Gray and Christmas, which reports on layoffs. And we see many, many layoffs occurring. We're seeing the tech sector, they're starting their layoff throughout this year. Their layoffs are going to go throughout this year, and we're seeing there's a equities firm which is predicting over 300,000 jobs are going to be lost in this area. We see DuPont right now, they're going to be laying off 6,000 people. Xerox is saying we are laying off people. The initial count is 178. We're seeing Alpha Natural Resources, 831 miners. They're going to be laid off. Roger Media is going to be laying off 200 people. And this is going to continue as we go throughout the year. Remember, the stock market is completely manipulated. It's not based on the revenue of the corporations. It's not based on what's really going on in the country. It's based on the central bankers blowing up the market bubble. Period. The end. That's it. They need that to convince everyone that everything is doing fine. Now, real estate is a little bit harder to manipulate, but they are able to do it. As the Fed creates free money, they pass this free money on to the hedge funds, the investment companies. They were told to purchase homes and hold on to them. They don't purchase one or two, they purchase thousands of them. Rent them out if you can, but do not let them out on the market. Because if they don't let them out on the market, guess what? The prices go up. They also told banks, if you have a foreclosure, try not to foreclose. Let the people live there. And I know many, many people that are living in their homes who haven't paid their mortgages whatsoever, and the bank is letting them live there. Because the banks are figuring, well, they're going to be taking care of their house. They're going to be mowing the lawn. And we don't have to worry about the home right now. And the Fed is giving us free money, so they're going to be buying up this toxic real estate. So what's the big deal anyhow? They keep those houses off the market. Guess what? The prices go up. Now, to bring in U.S. everyday people into the real estate market, what do they need to do? Well, they need to allow subprime. They need to bring down the requirements of the loans that they need to get, just like they did back in 2008, and this is exactly what they're doing now. But we know most of the people in the U.S. are not really buying the homes. The home purchases are coming from foreign investors like China. As the yuan devalues, guess what? They need a place to park their money, so they park it in real estate in the United States. We know the hedge funds are purchasing the homes. This is why J.P. Morgan Chase, Bank of America, Wells Fargo, Citibank, they have been laying off tens of thousands of people in their mortgage department since August of 2013, and it's continuing. So FHA decided, you know what, let's try to bring in even more people to the real estate market. So we're going to ask them to put 3% down. Actually, some banks are saying absolutely 0% down, and we'll pay for the closing costs. But this wasn't enough. Still, people weren't out there purchasing homes. Why? Because they don't have jobs. But don't worry, they came up with a different solution. Now they're going to offer lower mortgage insurance premiums. So, in January of 2015, they reduced the mortgage insurance premiums for FHA loans, and they're continually doing this. And as they lowered the cost of these home loans, they brought in 75,000 new borrowers with credit scores less than 680. They're doing it again. This way they can bring in people that have credit scores lower than 580. And we're starting to see that they're becoming very, very desperate. Now, the savings from on the borrowers is around $900 per year. Now, I don't know about you, but if someone has a problem with $900 a year, maybe they shouldn't be purchasing the house right now. And a lot of these people most likely probably shouldn't be purchasing the house, because we saw what happened back in 2007, 2008. When everything started to fall apart, people just left their homes and the whole thing came tumbling down. But they need to keep us in this illusionary world of real estate still doing well. Case-Shiller is saying, oh my God, home prices, they're rising incredibly. But when we really look at this, the house prices have flattened and they're actually dropping. They use a lot of seasonal adjustments to make it look like there's a gain in house prices. Now, I'm looking around the country, and guess what? In a lot of the cities and a lot of the suburbs, these house prices have come down quite a bit, and people are having a very, very, very tough time selling these homes. So when we look at it, we see that Case-Shiller home price rose by a very little bit, about 0.1%, if you don't manipulate all the numbers. And basically, this is the 7th consecutive miss in a row where they thought the house prices were going to go much, much higher. Now, they only look at a certain group of cities, and they're reporting about 2 to 3 months back. And we can see right now that the real estate market, the prices, and now this is not going to hit everywhere at once, but it does move quite quickly once it starts to take off. It's been moving very slow. And eventually what we're going to see is what we saw back in 2007, 2008, where all of a sudden housing prices drop dramatically and it spreads across the United States. And it will hit every area. And we're starting to see it spread right now. And we're starting to see it's getting tougher and tougher and tougher to purchase a house. Now, of course, the U.S. government central bankers saying, we don't need manufacturing for this economy. We're going to depend on the service sector. Now, yesterday we discussed that the service sector cannot push this economy along. And they're saying the service sector, it's not even connected to manufacturing. We don't have to worry about that. But guess what? The service sector is starting to decline, and it kind of is connected to the manufacturing sector. And we're starting to see the whole entire thing fall apart. December's drop in services PMI data, well, it went from 54, which they expected, and it only printed 53.7. This is the weakest since December 2014. And we're starting to see that the service sector is starting to follow the manufacturing sector, where they're both dropping. Market notes. A struggling manufacturing economy is being accompanied by a services sector where growth showed further signs of losing momentum in January, even before the bad weather hit. They went on to say the drop in business confidence is at its lowest level over the 5 years and suggests that firms are bracing themselves for worse to come. Worries about the financial market volatility, the impact of slower growth overseas, a downturn in energy sector, and uncertainty about higher interest rates all took their toll, and it's setting the scene for further weakness in the coming months. So they're already reporting that there's going to be more weakness in the housing industry, in the manufacturing industry, and we're starting to see this, and it's starting to hit all sectors of the economy. The Baltic Dry Index once again falls by 9 points to 345. And we're seeing from G-Captain reports is that these zombie ships show that there's no recovery in sight for the container ship charter market. This is the biggest crisis since the 2008 financial crisis, and it looks really bad. And they don't see any positive growth or any recovery in this area whatsoever. And what are we seeing? Well, the economic activity is slowing down much faster than experts anticipated. I mean, the Union Pacific, the largest U.S. railroad, they had an awful fourth quarter earnings. Revenues plummeted 15%. Net income dropped by 22%. This entire economy, it's a complete disaster. And now it's hitting every single sector in the economy, except for the manipulated numbers that the government and the central bank are putting out. The Chinese, well, they're looking at the stock market, and the people in the country are saying, you know something, let's start putting our money into gold. And they are seeing gold purchases rise. We see physical gold and physical deliveries from the Shanghai Gold Exchange at the highest point right now. Withdrawals climbed to about 2,596 tons in 2015, surpassing the previous record of 2,197 tons 2 years earlier. So people are looking at this and they're saying, okay, something's going on. I better take my money and put it into hard assets. This is what everyone should be doing at this point, because the economy is collapsing. Saudi Arabia right now sees the writing on the wall. We know they've been pushing out a lot of oil. They're not scaling back production. They're trying to put a lot of pressure on Russia. to keep the economy alive. They want low oil prices, but it is not working whatsoever. Saudi Arabia right now has outlined an ambitious economic development plan aimed at dramatically reducing its dependence on crude prices. Because remember, Iran has come online now. Now there's competition in the market. Saudi Arabia was, and still is right now, the leading OPEC country, but as Iran comes into full production, guess what? It's going to be tough for them. So they're already looking at different ways to invest in their country and looking at different sectors in their country to boost the economy because they realize what is happening. And what's happening right now is everything is about to change. The way we know the economy, the way everything is today, the countries we know today, everything is about to change. Everything is moving from the west to the east. The United States will no longer be the leader. The United States will no longer be the reserve currency. The United States will not be the powerhouse it once was. Actually, it's all been stripped away already. And once the world takes notice and acknowledges that the United States is no longer the center of the universe, this is when things really start to fall apart. And we are approaching that point right now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.